Hello, in this video we're going to show you how to assess and evaluate a property for sale that has a J-51 tax exemption and abatement in place. This video and model is meant as a rough guide for buyers who may find it helpful to get a sense of what exactly they're looking at in terms of taxes in the coming years. Again, if you need something much more in depth, we always recommend consulting your lawyer as well as your buyer's broker during your purchase. And if you are very curious about J-51 or even want to get this exemption done for your building, then you should certainly consult a J-51 consultant. So the first step is to figure out what specific J-51 benefits your building or the target building is getting currently. So to do that, let's go to Google. You can search for NYC property tax bill online, BBL lookup, NYC property tax bills. Any variety of places will get you to the same place. Gets you to the same place. You can search by borough, block, and lot. Those are specific ID numbers. Most people will prefer to search by address. Remember to read the instructions here carefully. Most important thing as of this writing is this system is a bit finicky, so whatever number you put, let's do an example, you will want to write the complete address with the exception of TH. You don't want to put 140th, you want to put 140 Street. And this way you won't have an error. You'll come up and see a summary of information about the property. This is an account history. You'll see that in fact it's been paying no tax. Notice of property value. This is an interesting statement from the city. If you take a look, you see a J-51 alteration is indeed in place. You can see the current assessments, projections for next year from the city. Very interesting though is often in this notice of property value, you will see an estimate from the city of the square footage. So they typically pull this number from, say, the condo lot declaration or the original offering plan. So this is a good place to verify the square footage. You go up, property tax bills, you can see the latest property tax bills that are actually mailed to the owner. Again, 0 taxes paid. If you go through, this part is very interesting. So this shows you that the assessed value before any exemptions and abatements is 52,000 something. These would be the taxes. But because of this J-51 alteration, so this part is actually the exemption. Remember that an exemption lowers the assessed value, whereas an abatement is actually a dollar for dollar reduction in the property taxes owed. So the exemption portion reduces dramatically the assessed value. At the same tax rate, you get a huge reduction in taxes and you're left with 952. And then the abatement, as we talked about, is a dollar for dollar reduction in your taxes, and it abates it completely, in this case, to 0. So keep these numbers handy. You go through. This page will actually give you information on the abatement, the J-51 abatement. You will see that again, this number matches with the 45,000 that we saw previously. That this is the reduction in the assessed value, and this is the abatement that was applied that you saw in the property tax bill previously. This is important. This shows you when this J-51 program started for this building. This is the amount of abatement that is left. Or I'm sorry, this is the total amount of abatement given, and this is the amount left. And you'll see that this figure is 90% of the alteration cost. So the city won't give you credit, 100% credit ever, and in fact, This is 90% of the city's estimate of the alteration cost. So this is also known as the CRC, which is the certified reasonable cost. So the city has a schedule and they have a cost for each type of work done. So this is what they say the cost of the work should be. So this could be very different from what you actually paid out of pocket. So anyway, this is what the city says it costs. You're given a percentage credit of it, 90% in this case. That was 20,000 and you have 12,000 left. So keep these numbers handy as we're going to use them now in the model. So going back to the model, you'll see all of the numbers that we previously saw. This is the current year assessed value. This is the current year, the exemption, so the reduction in assessed value. This is obviously the current year. This is exemption phase out year. So this year you do have to figure out for yourself, and this is pretty easy. So unless it is an affordable housing type project, usually it will get the 14-year exemption phase out, with the first 10 years being full and then the last 4 years being a phase out to normal values. So if you just do the math, this project, as we saw earlier, started in 2010. So then by 2020, current year, we're going to start seeing the phase out. So then the phase out is going to start in 2021 and into 2024, so the last 4 years. And the tax rate you saw from the property tax bill. This is the current year abatement, so 953 was applied to completely zero out the taxes. This is the remaining benefit that you saw. This is the CRC, the alteration cost that we saw earlier. And this is the max abatement percentage. So usually you will see that for these type of residential properties, it'll often be 8 1/3% is the maximum that you're able to take as an abatement per year, with a maximum lifetime of 20 years to use up the abatement. So that, in this case, specific example, it would be roughly 1912. This is, this is a percent of the CRC. So anyway, the model really does the rest. For for conservatism, and for simplicity, we've actually assumed that the assessed value, the headline assessed value, stays the same throughout the period. Again, assessed values usually, we'll say it will increase, but sometimes it can decrease. Like in a soft market now, it can decrease. So for the sake of keeping it simple and being sane, we've assumed that the assessed value remains the same. Now the J-51 exemption here, it starts out with whatever you have in the statement the first year, and then afterwards it's a rather complex formula. So what happens with this formula is essentially what we're doing is it'll take a quarter of the original 45,000 exemption value and reduce it by a quarter, essentially, until there's nothing left. So if it detects that the exemption year has started, then it'll start taking off a quarter per year of the exemption amount until it goes to zero, until it phases out in 4 years. And this is obviously just a simple formula of what the reduced assessment value is. Obviously this phases out after 4 years in this case. Tax rate stays the same. And then property taxes, again, this is a straightforward formula of just what, just the previous two multiplied by each other. The abatement amount, the first year, is given. Afterwards, it's a bit of a complex formula. So essentially what happens is let's take a look. So it checks whether the property taxes for that year are greater than this max abatement amount, and if it is greater, then obviously it can only be that max abatement amount. Otherwise, it is the property tax amount in that year. So this is it's a rather complicated formula, but as you can see, the point is over time, once it gets to a point where the remaining abatement amount goes down, it does correctly take that abatement amount and then use that instead. And then of course these are the actual property taxes paid. This is a rather simpler formula. This is what's what's left, and as you can see, it's 0 for the first year. It can never be negative, but then it starts creeping up, and then it goes to full market. And the remaining amount, same thing, it gets decreased over time down until it's completely used up by this year. So please feel free to take a look and play around with our model. If you do have any questions, please always consult us. We have a large team of partner brokers, lawyers, and other real estate professionals who are here to help you, and we'd be happy to explain this, especially if you are looking to buy a property that has this very unique to New York City tax abatement and exemption in place. Anyway, if you've enjoyed this video, please remember to subscribe and hit the like button or submit a comment, and we will certainly get back to you right away. Thank you so much for watching, and we hope to hear from you.